Good day Forex trader. Your USD Forex signal, more downside as US bond yields soar. The pair will likely keep falling in the coming days as the dollar strength continues. The next key support level will be at 1.0700. Bearish view. Sell the Euro USD pair and set a take profit at 1.0700. Add a stop loss at 1.0850. Timeline, 1 to 2 days. Bullish view. Set a buy stop at 1.0835 and a take profit at 1.0925. Add a stop loss at 1.0750. The Euro USD pair is hovering near its lowest level since 2020 after the strong US housing data and the IMF warning about the global economy. It is trading at 1.0800, which is substantially lower than last week high of 1.0923. IMF warning on the global economy. The International Monetary Fund, IMF, delivered a major warning about the global economy on Tuesday. The agency said that the ongoing crisis in Ukraine will lead to a substantial slowdown of the global economy this year. It expects the economy will grow by 3.6% this year, down by 0.8% from its previous guidance in January. The IMF also warned that European economies were substantially vulnerable, especially if they decide to place an embargo on Russian oil and gas. The countries have announced that they are considering blocking Russian oil in a bid to punish the country. At the same time, the agency warned that inflation will remain high in the coming months as the cost of most items remains stubbornly high. Data published last week showed that the American consumer inflation jumped to the highest level in over 40 years. Investors also expect the upcoming inflation data from the European Union rose to the highest point in decades in March. The Euro USD reacted mildly to the latest housing starts and building permits data. The numbers revealed that the country's building permits rose from 1.86 million in February to 1.87 million in March. In the same period, housing starts rose from 1.788 million to 1.79 million. The pair declined as American bond yields continued rising. The 10-year yield jumped to 1.29% while the 30-year rose to 3% for the first time in years. This performance is because investors expect that the Federal Reserve will move faster than expected. The EU will publish the latest industrial production data. Euro USD forecast. The Euro USD pair has been in a strong bearish trend in the past few days. It is now trading at 1.0800, which was the lowest level on March 7. It has moved below the 25-day and 50-day moving averages. It has also formed what looks like an inverted cup and handle pattern and is slightly above the key support level at 1.0758, which was the lowest level this year. Therefore, the pair will likely keep falling in the coming days as the dollar strength continues. The next key support level will be at 1.0700. GBP USD Forex signal, sterling stuck at a crucial support. More downside will be confirmed if the price moves below the support level at 1.2980, which was the lowest level this month. Bearish view. Set a sell stop at 1.2970 and a take profit at 1.2900. Add a stop loss at 1.3050. Timeline, 1 to 2 days. Bullish view. Set a buy stop at 1.3020 and a take profit at 1.3100. Add a stop loss at 1.2950. The GBP USD pair is trading at an important support level as investors reflected on the strong warning by the IMF about the US economy. It is trading at 1.300, which is both an important support level and also the lowest it has been this year. UK economy is at risk. The IMF made headlines on Tuesday when it delivered the latest economic forecasts. The agency now expects that the global economy will grow by just 3.6% this year. That outlook was slightly lower than where inflation is currently. It blamed the situation on the ongoing crisis in Ukraine. The GBP USD pair moved sideways after it warned about the UK economy. According to the IMF, the UK faces the worst inflation shock among all major advanced economies in the coming 2 years. It expects that the UK economic output will be about 1% smaller in 2022 and 2023 than its forecast in January. It pointed to the rising cost of living and slowing investments in the country. Notably, its 2023, it expects that the UK economy will grow more slowly than other G7 countries. However, it is worth noting that IMF forecasts are not always accurate. The GBP-USD pair is also wavering after the US published strong housing starts and building permits data. The data revealed that building permits rose from 1.865 million to 1.873 million. In the same period, housing starts rose from 1.78 million to 1.79 million. These numbers shows that the housing sector in the United States is still strong. The US will publish the latest existing home sales data on Wednesday. Economists expect the data to show that existing home sales dropped from 6.02 million to 5.80 million in March. Still, these numbers will not have a major impact on the GBP-USD pair. GBP-USD forecast. The GBP-USD pair has been in a tight range in the past few days. It is hovering around the 1.300 support level. As a result, the pair is trading slightly below the 25-day moving average. It is also between the middle and lower lines of the Donchian channels while the MACD has moved below the neutral level. Therefore, more downside will be confirmed if the price moves below the support level at 1.2980, which was the lowest level this month. If this happens, the next support level will be at 1.2900. AUD-USD Forex signal, extremely bearish below 0.7345. More downside will be confirmed if the price moves below the support at 0.7345. Bearish view. Set a sell stop at 0.7345 and a take profit at 0.7275. Add a stop loss at 0.7450. Timeline, 1 to 2 days. Bullish view. Set a buy stop at 0.7400 and a take profit at 0.7500. Add a stop loss at 0.7300. The AUD-USD brushed off the latest minutes by the Reserve Bank of Australia, RBA, and the global economic downgrade by the IMF. The pair is still hanging near its lowest point since March 17. It has fallen by more than 3.5% from its highest level this month. RBA minutes and economic slowdown. The RBA published the minutes of this month's meeting on Tuesday. These minutes had no implication on the AUD-USD because they were in line with what analysts were expecting. The members agreed that inflation had picked up and that more upside was possible. They expect that the rate will be above 3% in the second quarter. The members also believe that the economy was resilient and that consumer spending was rising after the government ended its travel restrictions. Most importantly, the committee said that the recent developments had caused it to bring forward the timing of its first rate hike. Analysts now expect that the first 0.25% rate hike will happen in June. The AUD-USD weakness coincided with the overall strong US dollar. The dollar index crossed the $101 resistance level for the first time in years. It has been in a strong bullish trend as investors price in more and higher rate hikes by the Federal Reserve. On Tuesday, US bond yields continued rising, with the 30-year crossing the 3% resistance level for the first time in years. Another notable thing was US real yields are close to moving to a positive level for the first time since March 2020. US inflation-adjusted bond yields rose to -0.04%, a sign that bond payouts are about to exceed the medium-term inflation expectations. The only data to watch on Wednesday will be the US existing home sales numbers. Economists expect these numbers to show that existing home sales dropped from 6.02 million in February to 5.80 million in March. AUD-USD forecast. On the 4H chart, the AUD-USD pair has formed a head and shoulders pattern. In price action analysis, this pattern is usually a bearish sign. The pair has also dropped below the 25-period and 50-period moving averages. It has also moved between the lower and middle lines of the Bollinger Bands while oscillators have been falling. Therefore, more downside will be confirmed if the price moves below the support at 0.7345. If this happens, it will signal that there are still more sellers in the market. A move above the resistance at 0.7400 will invalidate this view.